Scott. Happy Monday.
Hey, Jamie. Happy Monday.
Everybody else. It's come to hear what we have to say today. I want to thank everybody for that.
Yeah, it looks like a lot of them are non-subscribers too, so we got to keep that in mind here. Might be a lot of new people. A lot of new people today.
I know. Usually it's kind of a 50-50 mix or so, but it's a little higher than that today, which is out of the ordinary. But a good sign nonetheless. It means more and more people are hearing the message that we are sending out. Okay, so we've got some interesting observations for you guys today. And more importantly, we've got a bunch of things that you can take home with you in the form of top list windows. And we're also going to get into some setups because the market is producing those things. But before we get into the nitty gritty, I want to take care of the legalese real quick here. So as those of you who attend on the regulars know, we are a provider of information, but for everybody that might be new out there or attending a webinar for the first time, more importantly, we are a publisher of information. Please do not misconstrue anything that we say here today as a solicitation to buy or sell anything. Everything that we share with you here today, strictly for educational purposes. So if you do need quote unquote investment advice, please seek out a registered investment advisor or some other licensed individual. They'll be more than happy to give you all kinds of advice and take your money.
Take a fee.
Yeah, we'll make sure you take the fee as well. But you can find those guys just by using your favorite search engine to do that. All right, I think the lawyers would be satisfied with that. Before we get into the itinerary today, just want to make sure everybody, since we do have a large majority of new people or non-subscribers in the room today, that not only do we have the cutting edge flagship technology for scanning the markets, but through experience we've learned not only do we have to promote the technology and tout, the benefits that it brings with it, but it's getting so complex since we've been building upon it layer by layer for the past 14 years, it can get a little confusing. So we decided a while back we need to create a community around the technology. And we've done a pretty good job at doing that, but we're always pushing the envelope and expanding not only the software, but the educational content and the way that we bring it to you guys. So, it all kind of starts and centers around Barry's trading room at the top here. That's open every day. Barry opens it before the market opens, moderates it all day, talks about his trading, and it sure takes a special type of person to do that, and Barry is very good at it. So if you haven't been going in there, it's free to sign up, whether you are a subscriber or not. So check out the trading room. Obviously, today's Monday. You get myself and Steve on Mondays. Steve takes the helm tomorrow, which is Tuesday, every Tuesday of the week, does the Trade of the Week webinar, and Andy rides shotgun with him. We bring in Brad and Dan on Wednesdays for the Q&A demo, always entertaining, and then Andy wraps it all up on Thursdays, and I ride shotgun with him, and we give you Fridays off. So 4 webinars a week.
Technically, Fridays does have a podcast, but we'll get to that.
Podcast, yes. I want to say, in my mind, it's still a new thing, but how many have we cranked out about?
A dozen,
8,
I think.
Or more?
More than 10, yeah.
Yeah. See, time flies when you're having fun. So that's another thing, ladies and gentlemen, is the Friday podcast. We'll show you how to access that later, but it's pretty simple. Just go to your favorite search engine, Trade Ideas Podcast. You'll find it no problem. We try to keep it interesting, bring in, new people on a regular basis. So if you haven't tuned in, by all means, do yourself a favor, tune into the webinar, or the podcast as well. Okay, here we go. So we're going to let Steve take the helm here in just a second and do his thing with the market recap because, hey, things are getting quote unquote interesting, and I'm sure Steve will have some interesting things to point out about where the market was, how it affected people's psyche, things of that nature. We'll go over the Holly trades today, which the statistical model was kind of back and forth all day. But once again, that's telling us something as well. good information to have. And we're also going to talk about, just in general, what's out there in the markets. And, you know, pretend for a moment, of course, those of you who aren't subscribers yet, you're already there. But for those of you who are subscribers, think to yourself this thought. What would happen if all of a sudden you woke up tomorrow and Trade Ideas was not there? Where would you get your information? How would you find your plays? How would that impact your life? All right. And we're going to talk about that. We know we're those of us who use the product, and subscribers included in that, obviously, you get a lot of your information from our product. And more importantly, maybe you've had some guidance on us on how to read the information or how to scan for the information yourself. So whether it's information in the financial markets, or whether it's just information out there from maybe the news sources that you listen to for, well, news, non-financial related, but just in general, right? Now, I'm not even going to jump onto that topic yet, Steve. I'm going to let you do yours.
There's too much to say, yeah.
We're going to get into that because once you head down that rabbit hole, it kind of grabs you and let go. So yeah. I'm going to pass the baton to you real quick, sir.
All right. Pass it on over. And let me show my screen. All right. Okay, so as usual, I'll step in here and kind of just open up my bigger daily charts, take a look at a few of the key ETFs, starting with the SPY that tracks the S&P 500. You know, we had some interesting lines in there that were drawn last week, and one of them on the Trade of the Week episode was this trend line that we put in. I'm going to zoom in just a little bit, and I'm going to give Andy credit for really identifying this trend line. And you can see on Friday, Thursday, Wednesday, Friday of last week, how we stayed above this trend line. We actually, on that red wick right there, actually tapped it and traded right back up into the range. Well, today, over the weekend, as we all saw, we had one mother of a gap down. And once again, for the last 8 years, this market just has a funny way of buying the dip. It was yet again just another stick save for the most part, but we didn't really know that as the market gapped down on a very ugly looking gap, I would add at that, below a trend line. This could have gone three ways today. It could have gone gap down and sell, which I think I've mentioned in the past is probably about the nastiest scenario you're ever going to see on a market that's overbought, because there's really no chance for people to even try to sell or even establish shorts because the bidders are not coming in. Well, we didn't get that. Option number two was basically what we did get, which was just to buy the open green bar and then close it right back above that trend line. Once again, solidly closing on the technicals. We're looking for closing candles. We could have gone either way midday. The third option would have been to pop back up midday and then do what I call like an upside down horseshoe. This particular alert right here, the gap down, try to retain the or try to regain the gap and then back to lows. That's what the horseshoe down false gap retracement is called, and that can be a very diabolical momentum pattern for the bulls if you're not careful. So we were very close today in possibly setting up for one of those. You know, if we look at today here, you know, we filled the gap, and then we could have right about here, we could have easily rolled right back over, almost even tried at the moment, but the stick saved, the afternoon buyers came in, and once again, we're back in this same market. The sellers, I shouldn't say we, because I'm not a seller, I'm an observer for the most part, but what I'm not going to do is listen to people on TV or listen to analysts. I'm going to look at the footprints in the sand and let Trade Ideas technology tell me what to do. Matter of fact, I was going to jump in earlier. I'll just jump in now. You know, Trade Ideas pretty much has like a 99.9% stable, you know, ratio. We are hardly ever down. I think we maybe had 10 minutes or 45 minutes maybe last week, and that was the first time in a long while. But where I'm going with this is, I can tell you, and Andy will get a chuckle because he's on mute, but when we were trading, you know, in the same building, in the same retail trading office in Orange County, if Trade Ideas, and by the way, everybody in the room was using it because we all knew Dan, and we were all familiar with how great the product was, but if that product ever did go down, you saw a lot of people just kind of stand up and look around and go to breakfast and say, hey, text me, beat me when Trade Ideas comes back online, because that's what we've been using our whole life, not what people on TV are talking about. So we'll come back to that. But the footprints in the sand have spoken. Again, this could have been a very ugly, ugly open, but it wasn't. And it kind of gives us basically the notion that, okay, we had a bit of a fear, we had an ugly candle last week, and we had the averages at or very close to trend lines with a very, very ugly gap down this morning. Well, basically the market has once again reassured us, and I tell you, for years on end now, people are just probably getting really complacent at the way this market behaves, because it's very difficult to get a little bit of follow through. Back since the this is probably the most selling that we've had in terms of follow through down here, and these were the days leading up to the election as things were getting a little screwy. But you know, since then, every dip continues to be bought. The trend line was the most important thing I think I was looking at on the spiders here. Let's take a look at the diamonds, which is the proxy for the Dow. And using the horizontal lines that we had in there, this basically was a line that we didn't want to breach. Well, we breached it on the open, but we got it back on the close. So once again, the close trumps everything. The price action is basically back into this price action wedge, this price action lane here, this margin, whatever you want to call it, for the most part. Again, if the market had turned over and rolled and closed on lows, we would have been looking at really long topping wicks and then probably a very negative close. But we didn't. We closed in a very positive manner. So that being said, you know, we got to just kind of keep our minds open and roll with it. You know, what are we talking about here? The Qs barely even took out any support. I'm going to put another line in right there for the most part, going back to this support level. So relatively speaking, the Qs did not give back as much as the S&Ps and the Dow. And then checking in with our lagger, the IWM, which we really need to zoom out to get a better perspective on. This thing's just been going sideways for the most part. It got beat up really bad last week, but like everything else, it seems like, here's our line in the sand, and what do you know? We recovered, and we recovered right back in the range. So the big takeaway is everything's back in the range. A little bit of a scary sell-off, but back in the range. Don't know much more to say, you know, other than, once again, bravo market for a wonderful stick save. The buyers are still out there. But at some point, you know, that could turn. We don't know what that point's going to be or what the actual catalyst will be. It could be a black swan overnight. Who knows? But all we can do is focus on what the price action and the footprints in the sand are telling us. And they basically told us that they had a scare, but it was a stick save, and they're right back in range again. So I don't want to say no harm, no foul. We did do some damage last week on breaking a lot of support, but now we really have to build on the day that we came in today with the weekend out of the way now. We've got a full week ahead of us, and if the price action wants to continue to build, then that's what we'll go with. Anything else you want to add on the general stuff there, James?
No, you know, sounds about right to me, Steve. You know, what I will say about, you know, where we gap down to, and, you know, what we always talk about, looking to the left, and yeah. You know, hey, you know, looking at the SPY on the intraday, hey, it bounced off the bottom, relatively simple. You know, there was a lot of upside to be had, but keep in mind, as this thing is unfolding in real time, and you're thinking to yourself, okay, I hear Steve, Jamie, and Andy all the time talk about look to the left to try to figure out, you know, where a stopping point might be. And if you were doing that today, you're like, well, I can't really tell. You know, it's kind of in no man's land. And, you know, from what my eyes tell me, if we released, we could have popped all the way down to 230. Obviously, that didn't happen. So what I'm getting at here is that, you know, looking at the intraday on the bounce, you know, a lot of people are like, well, you know, it's, you know, you could have got long here. And yes, you could have. But at the time, when it was unfolding in real time, not such an easy decision to be making.
Yeah, this easily could have been scenario number 2 I was talking about. This big top wick basically got us back to almost flat on the day, and then we could have really rolled back over, and it could have looked ugly if we had closed down here, but we didn't. So there's a big difference between closing at or near highs like we did to give us the long green candle and giving a lot of that back, which would have wound up being a big long topping wick on the daily chart. So bravo, you know, two snaps for the market today. You did a good job. You hung in there. The buyers are showing themselves to be extremely strong. They're not allowing a whole lot of pullback at all before they step back in. So let's see if it's just one day. Let's see if one day can make a few more days of building some more bases, and then we might start to get some setups, additional setups out there. But we have a couple that we'll take a look at for you guys to mark up at the end of the broadcast here. But that's it for me on the market cap stuff. Again, just great job. Nothing's changed.
It appears that it's just business as usual.
BFD or BTFD is the acronym you hear out there. Just buy the effing dip. That's what people just seem to continue on to say. And so that was alive and well today, BTFD.
Buy the dips. That is correct.
Back to you, Jamie. All right.
Flipping it back over here. Now, what we're going to do first here is we're just going to jump into the Holly trades. And of course, for those of you who watch Holly, you know that today, for her, it's pretty much a non-event. All right. Now, of course, you can see my screen now, correct, Steve?
Yep, I can.
Just want to make sure. You know what? Let me, I know everybody prefers on these webinars to have the lighter background. So
I've heard that. Yep.
Alleviate people's eyes for just a moment here. Okay, so we all know what happened with the SPY today. And, of course, in retrospect, it's always easy, or, for those of us in the moment, it wasn't so clear just to get long down here. And, there was a lot of weird wiki action and we just had no footing. Now, the gap, all right, it's no coincidence that when there's a significant gap, the AI kind of goes quiet. And we can see that she did not put out a signal today until an hour, no, 2 hours, right? 6:30 to 8:51, a little over 2 hours into the open today.
I think you're scrolling. You might need to scroll back up.
Yeah, I was like, I know I saw him in there. There we go. Okay.
There it is.
Like, where did the 7 o'clock one go? Okay. So not quite an hour into the market, right, before she started kicking out trades. And that's simply because, for those of you who subscribe, you already know what's going on behind the scenes with Holly. But for you newcomers, what's going on here is that these are the strategies that made the cut after our AI did all of her analysis last night, or excuse me, Friday night, after the market closed, and we incorporated all of the data from Friday into the database. So she's got about 45 to 50 strategies. It's always going up and down a little bit based on us feeding her information, creating new configurations for base formations. But these base strategies will have enormous amounts of trades in them. We could never keep up with them. But that's the way we like it, because the AI does its work by backtesting these strategies and re-optimizing the strategies based on the new data that's been given to us for today. That's what's going on right now as we speak. We're incorporating all the information from the market today, every tick of every stock, into our database. When that's all done, the AI will take that information, reanalyze all of our base strategies, and only the ones that make the minimum score in our proprietary system will show up here for tomorrow's session. Now, we can see the trade count today. Just because a strategy makes the cut doesn't necessarily mean it's going to trigger a trade. So when Holly the AI is done with these strategies, the filter sets are very lengthy. It's a very specific type of event. So if that event presents itself, that signal's going to fire. If it doesn't, it won't. So a lot of people get it into their heads. They're like, well, the more volatile the market is, shouldn't the AI be trading more, Well, not necessarily. Just like what we saw today, there was a lot of movement, big gap down, then a big push up, but it's knowing when to participate, right? So with Holly being a highly advanced statistical model who's playing with statistical precision, and we can see what the statistical expectations were from each and every strategy coming into the session right here. These were the odds of anything coming out of this strategy had this percentage chance of doing what we thought it would. Now, when we have gap ups and gap downs, kind of throws off the continuity of data a little bit. So that's why it's not real surprising to see a day like today when the market gaps up big or down big. Steve, did you have something to say?
No,
there?
I was saying, it's true. The big gap up and the big gap down days usually are a slow start for the AI.
And then, of course, you have people that focus on gap strategies for single stocks. Does that type of rationale apply to the overall markets? Maybe, maybe not. You just never know until you do a whole lot of research. But we have two different modes that we look at with Holly. We have risk on and we have risk off. Well, there's the risk on right here and risk off here. Now, just to preface, risk off, what does that mean? That's simply Holly sticking to her rule set. And what do I mean by rule set? Well, just like a human trader, we have rules for Holly. Profit targets, stop losses, timed holds. Or if she's in a long position and it starts getting a little jittery and she wants to take her profit, she can do so. And when we look at the exit reasons in the column right here, you can always see if the trade's been closed because it's going to have a reason here. So on this first trade, profit save was used. If we double click on the DFI in short, span this daily or this intraday out here a little bit, and we'll look at this trade. So the entry price for Holly was 1944. You're going to notice the entry price here. It's going to correspond with the little blue box over here. The charts are always going to populate with all this Holly data. And of course, the entry signal was way back here. Now, I think I need to, there we go. I was missing a few bars there. So this is the open, comes down, does a little horseshoe action, and then we get the signal here. So of course, this was a short play. So we get short, we're in the money. And of course, this looks very similar to a lot of the long plays because sometimes these trades release to the downside on the shorts or go up for the longs immediately, and they'll never see this entry line again or this entry price. Sometimes they'll hug that line or pass through it multiple times before they do their thing. Now, this trade, we had a little bit of chance for the maximum alpha down here, but why did Holly get out? And we can see she got out on a profit save. So we got some downward movement here. She got a little nervous. She's like, you know what? I'm up 9 cents. I'm going to go ahead and take my money. And of course, on this one, we can see that that really worked out to our advantage today. Had she stayed in it until the day was out, stock's way up here, we would have gotten stopped out eventually. The red box is the stop loss that Holly always uses. So your chart populates with this information so that everything is up there and you can glance, see your stop losses, your entry prices. Of course, the green is where the stock is currently. So, typically, more days than not, we're going to see, we've been experiencing nice green days for Holly. Of course, every system is going to have its down days, even if it's a very highly functioning statistical model. So whether we look at risk on, which is simply holding every position till the end of the day, or risk off, which is Holly obeying her profit targets and stop losses, this little chart right here sure does tell the story. Because once you get used to this, you'll be able to read her P&L, which is basically like her own little mutual fund, and basically be able to discern certain types of information from this, or give us information on how we should behave as traders as well. Because if the statistical model that we're watching keeps getting up barely and then fluxing back down to where she's down slightly or right at the flat line, and this is a classic example, up, down, up, down, up, down, back to the zero line, even slightly negative, then back up, then back down to the zero line. When you see this type of activity from Holly, that tells you something. It's saying, hey, this stat model that's very advanced, that's doing this enormous amount of data crunching on a daily basis, it's having a hard time today. So that tells me, you, everybody else that's watching Holly, be very, very, very selective. Keep your powder dry. If it doesn't look extremely well, sit on your hands. Other times, Holly just takes off, gets green, and boom, it's off to the races. So you can kind of get a handle on how aggressive to be yourself by paying attention to, is Holly doing well or is she struggling? Looking at risk off, slight profitability, same old, same old. Risk on, same thing. So when we see the stat model having issues, that tells us to basically mind our P's and Q's. And if the trades aren't there for the day, don't push it. Otherwise, you made a bunch of trades, you might even be up on the market. But by the time you pay the house all the commission money, which can add up very quickly, it's a red scenario. Big difference between beating the market every day, P&L wise, and making sure you're net positive after commissions. So go ahead, Steve.
I was just going to say, yeah, that histogram is an interesting little tool in itself. A lot of times when you see a green in the morning and it just takes off and continues to kind of like, you know, move higher like a plane departing, you know, those are the days that seem to have some really nice trades and a lot of statistical wins. But the days when it's back and forth and the AI waits 55 minutes to make the first trade and then it switches directions on the other trade, and you're not seeing a whole lot of stamina or a good sturdy base and in a profitable direction on that early histogram, it does kind of set the tone for the day. I agree with you on that.
Right, and typically what we have are examples, and I'm sure tomorrow, the next day, we're going to have more of these events, and the data is going to play out as it normally does. But usually, you know, we have many different scenarios to look over and go, okay, Holly traded ENT, she took 5 cents out of it, and this is still a classic example. We'll pull up the ENT chart here. Nice little, nice, beautiful little entry today for Holly on this low price stock, and not a huge move, but on a percentage basis, not so bad either, especially on the risk on, which brings up a good point. People get a little bit confused when they first get exposed to Holly, and they're like, well, I can't really figure it out. You know, how do I know whether to go risk on or risk off? And it's really neither of the two. I like to approach this from an individual trade basis. So we get the call from Holly. Let's see, this one came out right at 8:25 my time, so 11:25 Eastern. Holly says, you know, I'm going to have me a piece of this pie, long ENT. And of course, a little bit of hugging the entry line, and then it starts to get some traction and head in the proper direction. Now, a couple of things to point out about this strategy. Number one, the 5-day bounce, that's the guy that produced this strategy. Anything coming out of that strategy today, the back test is telling us has a 61% chance of working today. Now, of course, no big surprise, it did spit out 5 trades today, and it underperformed. 40 versus expectations of 61%. But then again, that's the common theme here, is that the market in a weird spot, stat model couldn't really find a big advantage today. When it does, it's obvious. However, when we first brought Holly online, we had profit target, stop loss, and timed hold as reasons she would get out of a trade. But we quickly realized, you know, we don't want to have Holly still being in a trade and neither one of those things has been triggered. So she lets a winner turn into a loser. So enter, reduce risk, and profit save. That's exactly what Holly did on this one. What was the reason? It was a timed stop. So we know on the 5-day bounce here, those are all designed around a 90-minute hold time. We can see that right here. Now, Holly's not the best at exiting. We don't want her to let money slip away, winner go to a loser, because we all know just from Trading 101, that's a real good way to go out of business as a trader. So entry level is right here, and Holly gets out of the trade for a nickel. But we can see here, there was about 3 times that amount on the table of potential. So risk off is simply Holly going, okay, time stops up. I'm programmed to get out. She's going to plug out. Now, if we're in this trade, the best way to use the system is man with machine. Holly's got the statistical entries. we could never do the calculations that she's doing, and that's really what her strong suit is. Not so much getting out. Now, because what do we look at? What's the universal language that no matter what country you come from, what language you speak, you look at these charts, it's universal. So when I see Holly spitting this guy out right about here at 297, because of my tenure in the business and just sitting in front of the screens for decades, something jumps right off the page here. E&T, Holly's calling it right here. If we just take the liberty of drawing a line straight across from the previous high, which was put in with this wick here, what do we have? We've got what we call a range break. Now, I've already got high statistical probability behind this, and now I'm also noticing, hey, it's my favorite pattern as well. And whether I use Holly's recommended stop loss, which would be way down here, by the way, 272. Can't really see it because I haven't scaled my chart up enough here, but you get the idea. Now, makes it a lot easier for me to push the buy button or maybe even be a little bit more aggressive because I've got statistical weight behind the favorite pattern that I like to play, which is a simple range break. And of course, these patterns like to, sometimes if you catch the buyer early enough, you can repeat, right? Which is also another difficult thing for new traders to wrap their hands around or their head around at first is I'm winning, I'm real happy about it, but I'm going to get out here. When in all reality, once we start to see this pattern forming, and then we can easily draw another line across here and wait for that second break, a great time to add to a position.
All this time, of course, Jamie, the market was not going down, the market was going up. So your backdrop was also in favor to stay in that trade for as long as you could.
Correct, and sometimes that means something, sometimes it doesn't. Because we all know that sometimes the market's going down and we still have a whole number of stocks that are going up and vice versa, which is going to, we're going to get more into that in just a second. I just want to kind of give everybody an example. Well, if you bought 200 shares with Holly here, when you see her exiting for a nickel, go ahead, peel out a half your position. Take your nickel on that 100, stay in the other 100 if the pattern looks conducive like this one did. Put a stop loss in for your entry. You would have stayed in it and you could have potentially pulled out 3 times as much by going, okay, I understand Holly's getting out. She's getting a little jittery. I don't really see any reason to get out of the trade. I'm going to manage my risk because I like these range break patterns, and I'm going to try to get a little bit more than Holly on the exit.
Selling half can always be a great idea when the stock is going in your direction, because once it does, we're all wired the same. We're all wired fear and greed, but the problem is the fear and the greed are reversed. We should be fearing that the trade's going to go higher without us. But in reality, you guys all know, if you trade with real money and you're up and you look into that P&L and you're like, oh boy, all I got to do is hit this button and that money's mine. And if I don't hit that button, that money could disappear. And so then we start to fear on that scenario. Well, when you sell half, you basically satisfy both the fear and greed, which are your 2 biggest trading demons sitting on your shoulder, the greed demon and the fear demon. But we got to try and keep in order what the fear demon is actually fearing. And in most part, we're wired as humans to take a bird in the hand rather than maybe be a little bit more patient and maybe let the trade work out. So again, by selling half, it literally does calm your mind and calm your emotions. So if you're somebody who's struggling with that, give that a try next time with real money. It doesn't work with paper trading, but with real money, you'll see the feeling abate of, gosh, what should I do? Okay, I just locked in half. You know what? Now I'm okay to sit around and see what happens. I've got a bit more staying power just by doing that. So just wanted to throw that in there to some of the newer traders.
No, very well said, because guess what, ladies and gentlemen, watching data and not saying that identifying technical patterns on the charts is easy by any means, but once you get it, you get it. So in other words, it's the easier part of trading. The hard part of trading is the mental aspect of it, all right?
Oh, yeah.
So as long as we set up a framework to go, okay, simple enough. I've got statistical probability. I'm going to go with the AI. When she's getting out, I'm going to sell half. If I like the chart, I'll stay in the other half and use a break even for my stop loss. So the outcome has already been set. I'm either going to make more money or I'm going to get stopped out of this one. At least I still made my money on the first one. Simple as that. And the more you can simplify your trading routine and stick to your rules, the better off you're going to be.
Speaking of simplifying, I've got a confession to make, Jamie.
I love it. Let me hear your confession, my child.
I have not watched CNBC in probably over 4 years.
Oh, well, I got you beat. I got you beat. It's probably been a decade for me, at least.
Because I really don't care what they have to say.
Yeah. That is a perfect time to switch topics here, Steve. And I'll just, before we wrap up, Holly, I'll just say this. Holly, I have to say I'm pleased with her performance today. She lost a little bit of money, kind of got flat, kind of got positive, kind of got negative. But all in all, in the day, she's keeping her powder dry, and that's what we want to see. So not a whole lot of other trades to point out here that were stupendous. It's just the machine known as Holly didn't have a big day today because the patterns weren't there, and she kept her losses to a minimum, right? That's all any trader can ever hope to do as well. So let us do this. Let us talk about where you're getting your financial information. Just like Steve said, hadn't watched CNBC in 4 years. I got so sick of them 5 years ago. And, Steve and I are a little bit jaded in this topic because what did every freaking trading office that we ever traded in, Steve, what was a must?
Yeah. I had to have the CNBC on 5 different monitors.
Yeah. Of course, back then we had these things called cathode ray tubes. They were big square boxes. That's what a TV used to be, a big square box. But guess what? If you didn't have CNBC, then people would be like, well, I can't trade in your office. You don't have CNBC on. And it was an illusion back then because did we ever get anything good out of CNBC?
Only once, when Greenspan secretly cut rates by 0.5 point.
Right.
Other than that, I can't recall.
And before they threw Dorfman in jail, it was everybody
running.
Yeah. A certain time, and then Dan Dorfman would come out and tout his favorite penny stock, and everybody would, keys would be like flying across the room. People would be hitting the button so fast. And when you look back at that, it was quite comical. And then they threw him in jail. But every time, even with news feeds, we always had squawk boxes too. We had a guy down in the pit talking about, oh, is Goldman buying the futures contracts? We were always trying to get this informational edge, but guess what? Whether it was CNBC News or whether it was the squawk box, you pull up the symbol, the moves already happened. And that was 20 years ago, right? So
yeah.
Same things apply now. It's just faster.
Yeah, fast forward 20 years, and we still have a conglomerate who's a bigger corporation than they were 15 years ago that owns Comcast, I believe, that owns NBC, CNBC, that is. But my point is, it's just another, the crazy times we live in, right, guys? Right now after the election, we can't be sure what's real news and what's fake news. And what's fake news to one group might be real news to another group. And everybody's hiding in their echo chambers. Well, it's a perfect opportunity to really just kind of remind ourselves what CNBC really is. It's a corporate mouthpiece that's been talking about Snap IPO incessantly for the last month coming up to the IPO, trying to draw everybody in. If you don't think there's a corporate agenda in there, then you're mistaken. They're bringing on analysts. Analysts, in my view, are absolutely useless. I mean, if they were actually compensated on the performance of their calls after their calls, they would be probably fired, tarred, and feathered. But their job is to come out and create a narrative. And so analysts can come out like they did today, all in droves. Hey, all of them like sheep, all of a sudden today decided that, oh boy, we're running out of buyers in Snap. We need to upgrade. We need to start creating some upgrades and some ratings on Snap. And so once again, here's CNBC focusing on one stupid stock, and this used to be an interesting thing. An IPO used to be a very interesting scenario where you could actually maybe make money on an IPO, but the IPOs these days have turned into basic, bag holders. They've gone through every single A, B, C mezzanine level of funding all the way up to the IPO, the major exit, they're high-fiving each other, and everybody's all of a sudden owns a few hundred shares of something that's completely overvalued, which, by the way, has just been discussed and talked about and hyped ad nauseum. I don't trust CTOs. The only thing I trust are the footprints in the sand. And so where we're going with here is one of the reasons that we stopped watching CNBC years ago is it's a corporate news agenda that's just trying to drive bigger stuff that they want us to talk about. In the meanwhile, there is so much stuff going on. There are so many moves that are like IPO type moves that are happening out there in the smaller cap stuff, you know, that Barry and Dan and the guys in our room every day just about are on top of. So we want to talk a little bit about, you know, where the action is, and it's not always necessarily going to be on what CNBC wants you to be thinking and talking about.
No, I mean, you know what, 8,000 tradable securities, give or take a few every day in the market, and CNBC is going to sit there.
Just take a moment, yeah, for the people who are not really familiar with that, yeah, 8,000 symbols, and what's cool about what Trade Ideas does is each one of those 8,000 symbols has their own little database and dossier. And so we know each one of those symbols, what their average true range is for each day, what their average 5-minute candle volume should be, what their average volatility should be. So Trade Ideas is an extremely extensive database on 8,000 different stocks. And so if we just want to sit and focus on what CNBC is trying to get our attention on, well, more power to you. But, you know, I'm more interested in real stuff that's popping out at me, and that's showing up on the Trade Ideas data stream without a doubt. That's why I haven't watched that godforsaken channel in over 4 years.
No, it's more of an annoyance, right? So what I've done, ladies and gents, is I pulled these 3 windows over that we're going to be talking about. And yes, before we're done today, all of these windows will be dropped into the chat area so that any subscribers can grab those cloud links and instantly pull them up on their desktop and watch them moving forward. So while we're on the beat up CNBC bandwagon, okay, well, if CNBC is really out there talking to investors/traders, then why weren't they talking about this little stock today? You know, why weren't they talking about SCON today? That was pretty much going up and didn't care what the market was doing. That is just about to make, you know, that's just about to test some crazy levels here, you know, and if it does get above there, it should be pretty interesting. You know, the same thing for PTX, you know, PULM, a wide variety of stocks that we're going to go through here in just a moment and start to set up some price limit alerts, which will also be shared with you. All right. And the reason that CNBC is not talking about this stuff is it does not fit their corporate agenda, right? It just doesn't fit. Now, that's not good for you. It's not good for me. That's why Steve and I, you know, took the propaganda that is CNBC and said, you're not important to me anymore, right? We were all enamored with Maria Bartiromo back in the old days, but that was when we were young and didn't really know any better.
Really didn't have much of the internet either. So, yeah.
I mean, so we're not just pulling this out of thin air. We're sharing our life experiences with you guys. All right. So lots of crazy stuff was going on in the market today. Lots of stocks were going up in the face of a down market. And then there were lots of stocks that were going down today as well. Now, these guys right here, Trend Change Lubricant, Alpha Predator Stalking, and Alpha Movers.
Which, by the way, Jamie, people are asking about, so we will share all 3 of those before we leave, I promise.
Right. So the market, as Steve so eloquently laid it out for us earlier, is, you know, I'm sure from maybe you're new, maybe not, maybe you've got a lot of experience, maybe none, but a lot of people were probably like deer in the headlights today. But really, what's the market doing? Yeah, it could go all the way down to here. Maybe it does tomorrow, and then maybe we go range bound for a while, but it's business as usual. The market's going to take its breath. It's going to coil up for a while, maybe, maybe not. But the bottom line is this. It really doesn't matter what the market was doing today. These guys are still doing their thing. You know, it's not like, we had some tremendous sell-off. It's a little digestion action that we have here. So moving forward, we did have a little down push, and guess what? The trend change lubricant window has been kind of barren for a while. But guess what?
Mm-hmm.
It's like nature with fires and floods and whatever. It replenishes everything, and everything starts over again, and that's what we have today. Now we've got trend changes, really good setups to put on the plate moving forward, and similar setups with these other two windows. That's what we're going to dig into real quick here.
Why don't we share the windows first? That way we don't run out of time at the end and make a mistake. So, again, while he's talking, we're going to pull a few symbols off of these charts, and we'll talk about why we like them, why they stick out to us. And,
all right. I'll go ahead and pull the first one up here, and then I'll throw the windows in there. So we got PTX, we got Scone, we got Paul. Maybe you want to start with first?
I guess just PTX. And eventually, when he does share those windows, it's going to be in the chat window. So on your GoToWebinar little module there, which everybody has, there'll be a little button that says chat. Just click that little triangle. It'll open up the chat window, and then Jamie is going to be basically drop in the cloud link for the first one there, the trend change lubricant.
Right. Before we cruise on to this these interesting windows here. The reason we were talking about Snap, by the way, to quickly sum it up again, hey, Snap's this hot IPO. This is the first day trading, right? Been so hyped up for so long, and then they tell you the same old thing that they've been telling everybody since, well, when I came into the market in '92, this same story was being told to us brokers. Oh, well, here's a hot IPO coming up. You better get your indication of interest in. So I spend hours and days I'm like, I got 10,000 shares, indication of interest. Okay, the day comes around for the IPO. You put an indication of interest for 10,000 shares. Here you go, Jamie. Here's 100 shares of this nice hot IPO. Congratulations. I'm like, really? And so that was my first experience. You don't get the hot shares. The underpinnings of the machine that brought them public, all the institutions, they get the hot IPO shares. And then they tell everybody, well, you see, if you can't get the hot IPO shares, you need to buy in the immediate aftermarket. That's the next best thing. Well, hello? How did that work out for Snap, right? So they try to sell you these IPOs as these things that are going to do great things, but by default, you can't participate. So why does everybody fall for it? Well, because that's what's being told to you over and over again from brokers, from CNBC.
They're creating that's where the alpha generation is going to be. That's where the excitement's going to be. But that's a diversion tactic. That's what they want. The sell side of Wall Street is trying to draw in as much action, as much interest as they can to put bids on the table.
Right. So that's the whole thing. And the point being is that there's IPO caliber alpha 1 times, 2 times, whatever, 50%, 25%, 40%, whatever it is that you consider an astronomical gain. Those opportunities are there every day, but you're not hearing about them. You're hearing about Snap all day, every day, or how much Twitter sucks, or how disappointed, or whatever. It's the same old gobbledygook banter every day. But here, maybe it's the same thing every day, but it's good. And then all of a sudden, you're put in touch with names you've never heard of before, which have extreme upside potential, but you're never going to hear about it anywhere unless you're here. All right, so that kind of sets the tone here. So let us just get back to PTX. Now, Steve, I kind of cut you off there. I dropped the trend change in there.
So did I. I put my copy in there too while you were talking. Hopefully we won't confuse them. But yeah, just what Jamie's saying here. There are so many more things to look at than what the talking heads want us to look at and focus on. I will take footprints in the sand any day over somebody who just says, well, I only look at fundamentals, I don't look at charts. You know, when they say that to me, it's almost like, okay, I think we're done here. It's just
saying, all I eat is pizza. That's all I eat.
Yeah, good for you. Okay, so the trend change lubricant is a top list, which is looking for stocks that are down and beaten up in their 52-week range. I would say PTX fits that bill. What it also does is it has a secondary layer that looks for stocks that are getting ready to also make a 20-day high after being beaten up. So there's really two layers to what the trend change lubricant top list scan is looking for. Again, beaten up in the 52-week range, but making a nice hearty comeback in the 20-day range. And so we start to see patterns develop. You want to call them saucer bottoms, you want to call them double bottoms, you want to call them inverted head and shoulder bottoms, you can call them whatever you want, but we're trying to identify stocks that are making a change, going from distribution to basing to hopefully back to early accumulation. Now, what's neat about the trend change lubricant, for those that are not familiar, aside from just picking up a pattern and looking for a movement above a breakout, we are also taking into consideration short float and short float percentage and the size of the float. Now, if we take a look at PTX, there's something really interesting going on here. Why don't you just highlight that PTX line, Jamie, with your cursor. The first thing I'll show you, or you can use that, either way. The short float is 35%, which is showing us there on our single stock window, and that's out of a total float of how many? Only 8 million. All right, guys, anything under 20 million is considered kind of a low float stock. Anything under 10 million is really low float. And the lower the float, the less stops there are for the price action to move. The less, it's like a speedboat versus a giant tanker. You know, a tanker like IBM with 1 billion shares in the float. But what we got here is a stock with PTX. Not only do we have a very compelling base that's being built, but behind that base we have a little extra secret confidence in the back of our brain, which is, hey, this thing, I would not want to be short. Put yourself in these guys' shoes. What if you're short something that you know could just blast off with only 9 million shares in circulation, and if you're part one of 35% of the other people, 37%, is that right? I'm sorry, yeah, 35%. You know, that's the kind of thing that can get away from you really quick. And I'll just ask Jamie to put up CWEI. That is a stock that also had 9 million shares in the float. And that is a stock, if you'll put it back up a little bit, that came out of the same type of a trend change. It had 56% short the float. Our job was exactly right there to identify that pivot level. Once it broke above that pivot level, it's been a short squeeze for months on end. So that's the poster boy. That's ideally what we're looking for with some of these trend changes. And I bring up CWEI because, my God, it's the same pretty much metrics. You know, 9 million shares in the float. In CWEI's case, it was over 50% short. In our case here with PTX, it's only 35, but still definitely good enough to mark up and make sure that we've got an alert set so that we don't miss it. And just real quickly, when we're setting alerts like this, guys, you know, I talk to a lot of people and they're like, you know, I've been to this guy's room, I've been to that guy's room, I got 15 alerts up, I got bells and whistles going off, I don't know what to do. The idea is to find what works for you, what's your risk tolerance. Some people don't like those warrior traders or those really small ones that'll get move really quickly and then halt. And some people do. Well, it's all a matter of liking. It's a matter of taste and personality and what works best. But if you can use the price alerts to have trades come to us in real time, maybe not today or tomorrow, but it's like, yeah, I remember setting this alert. This is why I liked it. Oh, thank you, Trade Ideas, for showing me that buying it, you know, 2 days ago might have been, you know, the wrong thing to do. Let's wait until this thing triggers, and then we have some trade ideas coming to us in real time. And that is what I'm trying to say is one of the ways we can try to really simplify trading is once we look for the type of setups we're looking for, in this case, PTX, we can just line that thing up and put a price alert in there and then just wait for it to trigger.
Hey, so magically, Steve, when I look at today's high, we came in right at 4.20. So do we want to use 420 or 421 as the entry?
I'd use 421. Why not just go a penny above and see if we can get any follow through? The idea is to see if we can trade above and get any follow through at all. And you know, there's no guarantees that this thing won't follow through, but I tell you, when you see those types of numbers, again, 9 million shares is nothing for a float of a stock, and 35% of those can get price can get away from them really quick before they know what happens. And so we're basically trying to really exploit short squeezes here.
Right, and I always like to notate, you know.
Somebody's telling us, you know what? Even they're right. It's trading. It is trading up in the aftermarket. You see that? Yep, that's going to trigger. That's going to trigger our stock. Why don't we do this? Why don't we do this, Jamie? What's the high of that red candle just under your arrow there on the daily?
Hold on. The high of the red candle here.
Yeah, on that daily.
419. Pull back.
No, on the daily.
Oh. Talking about this guy here.
Yes. What's the high of that one?
440.
Let's go ahead and use that because it's trading higher after hours. We necessarily can't set an alert that's going to trigger after hours, and we do want this thing to be fresh in tomorrow. And I'm thinking that quite honestly, was the last hurdle it had to clear. Anything earlier than that would be, and there's nothing wrong with that, but more of a head start type of a look just to get it on our radar. Thank you for pointing that out, John. Appreciate that.
And of course, if it doesn't do that, then it's a good one to keep an eye on. Maybe it vacillates around, comes back down. But the bottom line is, don't forget about it.
All right. What else we got?
PPX 440. All right. So that one is working. Okay. Next on the list, we have Scone.
Let's go back to our daily.
So we can wait for the break, or we can try to get in a little bit early.
I think what we talked about was that red bar to the left. So basically wait for it to clear out of there. And our metrics on this one are 23% short of, oh my God, 1.8 million. Are you kidding me? If we thought 9 million was a small float.
1.8. So are you talking the top of this wick over here?
Talking the top of that wick, yeah. Let's let this thing get a head start. It's, you know, it's still $1 stock. It had a really nice run today. That, in my mind, is really the final hurdle it needs to fill.
Right, so that'd be 181. Oops.
And then if I'm Jamie, whatever I would do is I would be putting in 1.8 million in the float would be the attention getter. I'd probably put a couple exclamation points just to remind myself, are you kidding me? 1.8 million, and this thing is starting to come to life here. So very interesting.
Short float is 23.7%.
Yeah. So what'll happen is when these things trigger, you'll have a little bit of head start on your notes to know exactly what you were thinking and why this thing came up to you and said, hey, Steve, hey, Jamie, remember me? Yeah, I remember you. We were in a nice, quiet, non-emotional, non-trading state, looking at the charts, trying to be objective in a Zen mode. That's what we were doing. All right. What's next?
Now, everybody might remember good old Palm, which a lot of people in the trading room
like to call it Plum.
Destroyed it. But you know, it did its dance. It's kind of consolidating here.
Go back to
a good one to keep an eye on here for pullback.
See the volume there on those green bars in the last 7 days? Got some nice volume, and it's basically flagging, you know, 1, 2, 3, 4 days pullback. Now we're on, today was our 4th day of pullback, kind of setting up for a little flag there. I think watching the highs of today, if you can take out the highs of today, it's worth getting on our radar with a price alert without a doubt. And yes, is it in the morning? Gosh darn it. The Scone earnings I thought were aftermarket. You all do your due diligence on SCON. We'll know, of course, when the market opens if earnings came out pre-market or if they were coming out post-market. Thank you for the reminder on that one, Chris. I thought they were coming out post-market, but we'll see. We'll know. Scone is definitely before somebody says, all right, we may have to ditch that one if it's pre-market.
Right. Once again, we're looking at the footprints. Earnings are second.
Sourcing. Thank you, crowd, for the crowd validation of a good point there. But yeah, the PULM has been all over the boards lately, coming and going with volume, and nice 4-day low volume pullback. Let's see if we can maybe get something to work out of that. Scone, we're just going to have to let go, I suppose, because it's going to do its thing tomorrow. But still, you know, could be an interesting earnings day if it has good earnings. All right, this one, you know, it stuck its head above today and kind of pulled back like a turtle, turtle-headed, as we call it.
High of the day.
Yeah, I would go ahead and do it exactly. High of the day. Once again, you know, it's just a stock that's trying to base and another low floater. Not a huge short float, but if it can follow through through that little turtle head, there could be some interesting alpha to be had on that one.
Yeah, there's not 9 million share float. We got a little bit of a short float of maybe not quite 4%, not even really worth notating here. Yeah. It's more or less just this perfect little
cool
area trying to bust out of there.
And again, thank you for the other people coming in, John and Chris, and confirming the pre-market on that scone. So good to know.
Yeah. Okay, V-Ray.
Right. Yep.
With, you know, clearly way out of its box.
Are we going to chase something like that? No, sir. However, what we could do is go to the 15-minute, and we could zoom out a little bit on the 15-minute. Give ourselves a few days to try and see intraday. It's hard with those you know, leave them on. But I think it was around 7.25 that I identified using roughly that 15-minute chart. A lot of congestion in there. Yeah, roughly, right? The tops of those. So setting pullback alerts, sometimes what I'll do, guys, is I'll grab that 15-minute chart and look for a level of congestion in the past few days on the 15-minute chart. In this case, kind of a level that it broke out from. And then when you go back to the big chart, you can see you could probably make a case for, yeah, there could be a pretty decent pullback. I certainly wouldn't want to be the guy that bought at the close today after 7 green candles and a wick, but maybe we can observe the price action. Now, again, on a pullback alert, the alert's going to go off, but it's up to us to watch the price action. It might overshoot by a dime, by 20 cents. Maybe it pops back up, but you watch it for 10, 15 minutes. All of a sudden, buyers start to show up at that level. That's all I need to see to get interested, is at least see some other people seeing the same thing and the bids holding and the selling abating. So the VRAY is going to be basically a pullback setup. Definitely showing some life in it on the daily, but we wouldn't want to be chasing up here. We want to give ourselves a better chance.
All right, Steve. So do we want to use 7.25?
I want to use 7.25. That's what looked good to me on the intraday.
Right, and if it hits, great.
If it hits, great. Now, don't forget to go long. Don't forget to go long on the. There you go. Because otherwise it'll trigger as a short, and we want to track it as a long. So pull back. You know, watch the action.
PV fell 7.25.
Yeah.
Price falls. There we go.
Now, did you share your other 2 alerts? Because somebody was asking about Alpha and the Predator.
All windows have been dropped into.
All windows have been dropped into the chat room. Wonderful. Yeah. All right. Did we have anything else we were going to share?
We just did V-Ray, right?
Yep.
And we got one more to take a look at here. RGLS.
Okay.
Coming from the trend change once again.
Coming from the trend change. This one could go either way. This one, yeah, it could go either way. It could be a pullback to the level it broke out of, and that honestly is probably where I would want to be on the safe side, because it could follow through tomorrow, but it's already had a couple of green candles behind it and underneath it. I'd rather maybe wait and see if they're going to shake those people out and just return to the place from which it broke out and be a safer entry rather than a chase entry. So just like we did in V-Ray, bit of a pullback, but watch and see if the price action comes back and see if a bidder steps in there.
I think, 151, just right back down to here, 151, because this one looks perfect for one of those wide range bars on the open where they rip it down and trigger the liquidity. So we'll see if that happens. All right, pullback fill on this guy, and then I think that wraps us for the alerts. So now what I'm going to do is drop this link in so everybody can grab these alerts and load them up. And where did my chat go? There it is. Come on, mouse, you can do it. There we go.
One of the better students out there who's in our room every day, Leon, just called out TBPH. It's got 30% short of 30 million. And both Andy and I agree here in the chat. We just took a quick look at it. Not a bad looking wedge break there either. So TBPH could be one some of you guys could keep an eye on that was just called out by Leon, who I trust has a pretty good eye for some charts out there.
This guy right here, TBPH.
Yeah, let's take a look at the. If you take a look at the, there you go. So you've got something that's breaking out of a nice wedge that it's very easy to see with your eyes, but you've got some nice short float. So thank you for that, Leon. Appreciate that. You got looking at your single stock window, 30% short the float.
Right.
There's some interest there. I wouldn't want to be short that thing. It looks like it's starting to get going. Let's put that one on the radar. Not for the not for this session, but yeah.
Biotech, so we know that those can have the tendency to be a little bit more volatile, to say the least.
And most importantly, earnings are behind us, so hopefully they don't drop any news on the swing traders if they're holding long overnight. But that should do it, eh? We got all of our alerts dropped in there. We got some charts marked up. Hopefully we dropped a couple nuggets of wisdom that were picked up by you all. So let's bring in Scott and have him show how people can save some money on their first month that haven't tried yet.
Yeah, it sounds good. Thank you, Steve and Andy. Well,
yeah, were we talking about the B Plus at all today, Scott, or just go on to the podcast slide?
Oh, we can mention Brokerage Plus. We do have a beta. It's been up for, I think, 2 weeks now that lets people who are using interactive brokerage connect to a module in Trade Ideas called Brokerage Plus, and that lets you automate your trading and portfolio management. And right now it's only working directly through interactive brokerage. We'll be adding some new brokerages at some point. But in order to access it, if you are an interactive brokerage client, you want to get the new beta, which is 4.0.122, and you can get that by going to trade-ideas.com/beta. You can also, I don't have a link for the instructions how to do it. There was a recent video that we released. It should be in our Getting Started videos. If not, you can search for interactive brokerage in our YouTube channel that shows how to get started with that. Or just email info@trade-ideas.com after initiating setup. If you run into any difficulties, we'll hook you up with that video and any instructions needed. It's really gotten some excellent feedback. It's free for now. If you already have a premium membership of Trade Ideas, you don't need to pay anything extra for Brokerage Plus. You can just add it and use it with your interactive brokerage account. We will be charging for it, and it will be just over $1,000 for a lifetime license for the Brokerage Plus access. But we will be allowing everyone to get it for free until we make the change, and that will be when we switch it over from beta to production. Should be happening within the next month or two. So now is a great time to try that if you are an interactive brokerage client. Go ahead and get that, try it out. Check it out. It's got some really great portfolio management tools in there. So do try that out. We also have a podcast. We've been promoting this for several months now. We have 12 official episodes out there, plus some additional bonus content. So go ahead and look for it in your favorite podcast app. Just search for Trade Ideas Podcast. It's real easy to find in iTunes, Stitcher, Overcast, iHeartRadio. Any of those podcast apps have it. So go ahead and just add that, subscribe to it. Look for it on Fridays. We release new episodes on Fridays after the close, talking about the week and what to look for the next week, as well as some sage trading advice from experienced traders like Dan Merkin or Jamie Hodge or Steve Gomez. Always good content. So thanks for joining us. We have a code that's good this month and you can save. It's just like you see there on your screen, all caps, Pro Holly. You can also download a PDF. It's there is an attachment in your handouts panel. Just find where it says handouts in your GoToWebinar interface, expand that, and you can click the blue link to download a PDF with a couple of these slides, including this one that has the code that you can use to subscribe and save 15% off your first month or year of TI, either premium or standard. Now, even the standard version includes a full hour of one-on-one training, so it's an outstanding deal, great way to get started with Trade Ideas. you have any questions about getting set up and started, email us info@trade-ideas.com. And tomorrow we'll shoot you an email from GoToWebinar with to the email address used to register with a reminder of where to find the replay for this webinar. So go ahead and follow Steve Gomez at Today Trader on Twitter, or Jamie Hodge at QuantBot, Dan Merkin's Trade Ideas 1. We also have Trade Ideas and a couple other ones. Follow us on Facebook, facebook.com/tradeideiaspros, the location on Facebook. And by following us there, you can see some new content we post only there, and also share it with your friends to kind of, spread the love around. We love contacting more of you and showing the light about statistical analysis for trading and how we are different. You can get Steve directly, steve@trade-ideas.com, or Jamie Hodge is jhodge at. If you have a technical question, email us info@trade-ideas.com, or for billing help, you can call our 619 number. Thanks everyone for attending. We'll get the recording up tonight and shoot you a reminder tomorrow. Thanks, Jamie. Thank you, Steve. And,
all right. See you tomorrow.
Yeah.
Thanks, guys.
Thanks.
We'll see you tomorrow.
Later.